What's up, Monetize Nation? This is George Pitts, your income strategist, and today we're going to be talking about a very important topic for finances, and that's revenue versus net profit. Now, the reason I want to talk about this is because there's so much that goes on social media where people say, oh, I made $1 million doing this, or I made $100,000 in a month doing that. But the biggest thing that many people don't talk about is the revenue versus the net profit. And we're going to touch on those today. Now, let's talk about this. Revenue is the money that a business generates before any expenses or operations have occurred, right? So if a business generates $1 million, but it cost them $250,000 in marketing, $100,000 in outsourced, help, and then they got to pay themselves that. Let's just say you pay yourself $100,000. Well, that means that the business cost was about $450,000, which means that there was only $550,000 in net profit. So yes, the business generated $1 million, but it's really not even net profit. They profited about $550,000 after expenses. And then when you take on taxes and all those other things, that might drop it down another couple $100,000. So it's very important to understand this concept before you go into business. And even for your job, right? It's the same thing. You have your base salary, and then you have your net income or take-home pay. It's the same as revenue versus profit. So think about that from those terms as well. If you go and you get a job and they say they give you $120,000 base plus a $40,000 commission, that's $160,000. If you're putting down or you're moving and operating on $160,000 income, you're putting pressure on the income. Because for one, you haven't taken into account any of your expenses, your healthcare expenses, your retirement expense, any of your pre or post-tax deductions, and most importantly, taxes, right? So yes, you might have $120,000 base pay, but after all those expenses, that might take you down to around $85,000, right? And then you got to think about, what about the commission, right? So you got the bonus structure, but what does it take to meet that bonus? Do you got to hit a certain number? Does the company have to hit certain numbers? What is it there that's going to take for you to get that other 40,000? That may be out of your control or something that you can only control so much of. So if you are operating from a place of, oh, my gross check is this, and when I get a bonus is this price, so I can afford this, this, and this, you're setting yourself up for disaster. Same thing in business. Oh, I made $100,000, but if it costs you, let's say you made $100,000 in a month, but you paid $300,000 for Facebook ads and Google ads and all this other stuff, $350,000. So now you're down to $650. Let's say that you paid a company to run those ads and they charge you $10,000 plus 20% of the revenue, right? So now if they charge you $10,000 plus 20% of the revenue and you generated $100,000 and they get 20%, that's now $20,000 plus the $10,000. You owe them $30,000. So now you done chopped that down so much. So now you're down to what? If we're doing the math here, you're down to about 60,000 or 50,000. I don't know. I've kind of lost count. But you get what I'm saying. If you continue to operate on just the amount that you make before any expenses, you don't really know how much money you're making, and you could be making a bad decision on what you're using or planning to use that money for. I'll give you an example. I had a client that had a $50,000 launch that we did, and it was organic, right? We leveraged their existing audience, and we did a little bit of influencer marketing that was about $1,500. So with that, plus the systems that was put into place, what they cost me, this person was able to bring about $45,000 in before their taxes and any of their additional stuff. Well, they ended up moving on and they hired another, company to do like their Facebook ads, and they wanted to scale their business to 6 figures. They ended up having a $115,000 launch, but they spent $55,000 in Facebook ads. And you're probably thinking, how did they spend $55,000 in Facebook ads? Well, it was very simple. Every time they made money from a sale on Facebook ads, they just dumped that money back into the ads part, right? Which was great. That's what you're supposed to do. You should have a percentage that you dump back into it, but they were just taking everything and put it back into it. So when they looked at their statements, like, yeah, okay, I made it was a $115,000 launch or something like that. Well, the company that they had doing their ads had a thing where we're going to manage your ads for this price, plus we get 20% of the gross profit. Whatever you generate, we get 20% of that. So they generated let's just, for ease of math, because I don't have my calculator with me, I know it was 115,000 that they made, but let's just say it was 100,000. So this company gets 20% of that. That's 20,000 off the gate. Then it cost them they put $55,000 unknowingly into ads because they were just putting money that they were making back into it. So now you take that 55,000 plus the 20,000, that's $75,000 that's gone, which means that the net, well, it's not even net because we haven't even got the taxes. They're at about 25,000 already, and we haven't even got the taxes, any of their system expenses or anything, their VA or anything like that. So yes, $100,000 sounds good, but what is the real cost behind that? Understand what your costs are going to be, and then understand what your take home is going to be. So you can see, are you making a good deal? Is it important for me to give someone 20% versus finding someone that I just pay a flat fee and know that the majority of the money minus the fee is going to come to me? Because if you don't have these things in order, you could end up making a mistake giving more of your business revenue to someone, putting more into, monthly expenses if you have a 9-to-5, whether you go and get the Escalade or the Mercedes, or you go and get this because you think your income is going to be that based on your new salary. And then you find out, oh, I don't hit my number. And so my take home pay is greatly reduced, but I still have all these expenses that I'm responsible for. So understand the difference between your gross profit or gross income versus your net profit and net income before you make financial decisions. So that's today's topic. That's today's message. Until next time, learn more and earn more and monetize everything.